5 platforms evolving at the same time now: robotics, energy storage, artificial intelligence, blockchain technology, and multi-omic sequencing. The IMF forecast is 3.1%, but even that has come up. The consensus forecast last year, when we did this chart, was 2.6%. Now, many people understand productivity is higher than they thought it would be, and so they have raised their assumptions.
The founder and chief executive officer of Abra, a cryptocurrency asset management, Bill Bargett, has made a bold prediction that Bitcoin will experience a staggering increase, with the goal of reaching a peak of approximately $700,000. Bargett relates this increase to substantial liquidity injections, which he predicts will be unleashed by the current administration in the United States, eager to maintain interest rates low and support the economy. According to his hypothesis, there is a possibility that quantitative easing might accelerate the growth of both the regular market and the cryptocurrency industry. Bitcoin is anticipated to reach a base case price of $350,000, while Ethereum has the potential to scale to $88,000, according to Bargett. It is possible that Bitcoin might potentially double its aim, and Ethereum could skyrocket to $116,000, according to his most optimistic projections. Additionally, Bargett believes that Solana has the ability to reach $900, and he predicts that it will do so. This widespread confidence is underpinned by programs known as easy money and the notion that government involvement will pour large amounts of liquidity into markets.
Here you can see Bitcoin to gold. The gold price has been extremely strong, so they've been passing the baton back and forth. Last year, at the beginning of the year, the gold price was much stronger than the Bitcoin price, and you can see what happened in the second half of the year. And now we've passed the baton back to gold for a little while, but you will not be surprised to know that we expect the Bitcoin to gold ratio to continue moving up as it has really in a trend sense since it began a number of years ago. Now, I'd like to turn over to big ideas now. Just a few charts to whet your appetite. We released Big Ideas 2025 this week, and we are going to be doing a lot of videos around each section. Each one of the teams is going to present its section and bring it to life for you. But just to give you a sense of more high level what we think are the ramifications of the massive amount of innovation taking place today, you can see where we believe real GDP growth is going. So our forecast for the next 5 years is that it will ramp and we will average 7.3%. Now, some people think that's absolutely crazy. This is a global real GDP growth number. Now, the reason we don't think this is crazy and that it could be very conservative, as crazy as that sounds, is the history of real GDP growth globally is step functions associated with big technology cycles. And as I mentioned before, the last big one was around the late 1800s, early 1900s. For the 400 years before that, real GDP growth, as best as Brett Winton, our chief futurist, in consultation with academics, has figured out, the real GDP growth rate back then was 0.6% over 400 years on average per year. That technology revolution, telephone, electricity, internal combustion engine, took it to 3%. That's a 5-fold increase. We're saying little more than 2-fold increase, even though we have five platforms evolving at the same time now: robotics, energy storage, artificial intelligence, blockchain technology, and multiomic sequencing. The IMF forecast is 3.1%, but even that has come up. The consensus forecast last year, when we did this chart, was 2.6%. Now, many people understand productivity is higher than they thought it would be, and so they have raised their assumptions. The next chart involves the ramifications of all of this innovation, or the impact on the financial markets, the equity market. You can see GDP, the trillions that we expect in the years ahead. And you can see where we think the market, the global equity market, will be valued. Right now, and this actually was a surprise to me when Brett showed us this chart, globally, the GDP and the equity market cap are essentially equal, so 100%. Now, in the US alone, that's closer to 200%. So it means the rest of the world could be very undervalued if the cost of innovation is collapsing, which we believe it is, and therefore many more people and businesses will have access to it throughout the world, not just the US. Now, that also assumes that the regulatory environment and incentive systems are right. And they are not, especially in Europe. The regulations are very thick. I was just over there because it's not just the European Union regulations, but each country still has its own regulations. So I know they're trying to sort that out, and should, because we sense there's a high appetite for exposure to innovation in Europe.
The bullish mood expressed by Bargett is not, however, shared by everyone. Arthur Hayes, who once served as the CEO of BitMEX, is cautious about the future of the sector. He cautions that the political climate may not have undergone a significant transformation, and that there is a possibility that Bitcoin will experience a retracement to values somewhere between $70,000 and $75,000. As soon as the markets realize that the promises made by the government would not yield quick and unending benefits, Hayes argues that this dip could actually take place. Even if there is a lot of doubt, big organizations continue to forecast that Bitcoin will reach six figures by the time we reach the year 2025. Even if the path that lies ahead may be difficult, the general belief continues to be that the cryptocurrency market will prevail in spite of the challenges that lie ahead. Forecasts continue to keep traders and investors on the edge of their seats.
Remarkable start to the year. Now that the Trump administration is in, we're seeing Doge in action, the Department of Government Efficiency. It looks like 60,000 people wanted to take the buyout before the judge stopped the program temporarily. So 60,000, what is that? I think that the Trump administration wanted 10% of federal employees to sign up for this buyout program. And that would have meant a little over 200,000 people. But if you look at the number of people who would have been exempt, meaning they did not qualify for this program, that number is a little over 1 million, I believe. And so 60,000 out of 100,000 would be 6%. Now, we'll see what happens. But it is important, I think, that Doge is at work and moving swiftly. In fact, the administration is moving swiftly on all sorts of things. I think that as this administration advertises what we're spending money on, and really presenting it to us as our tax dollars. Would you spend your money on this, that, or the other? I think it's making more sense to many people, not all people, and we understand that, that we probably are spending too much on programs that have little to do with our day-to-day. The other thing that President Trump is doing is he is using tariffs as in his negotiations. And that became clear, especially vis-a-vis Canada, when there were retaliatory tariffs proposed, and President Trump made it very clear, look, there are two things that we're negotiating about here, immigration and drugs. And so he really wasn't using it for anything but that. And that became clear. Same with Mexico, and the negotiations are on. Now, the other thing that's going on, and we'll get to this when we get to the charts, is, historically in the U.S., tariffs were the primary source of government revenue. Now, that was quite a long time ago. And you'll be able to see the shift toward income taxes. But it does seem that the president is thinking very much about taxes and how to maybe shift a little bit more towards tariffs once again, as we move perhaps to a flatter tax system, which would be extremely healthy for the economy. Take the government out of our hair. Let us spend our money in ways we choose, charity and otherwise, of course. So we're very interested in that, and I think the market is beginning to sniff out that we're onto something here, because even though interest rates are still pretty elevated relative to where they were, at least, the equity market is acting pretty well throughout this period, with long duration equities, meaning equities like those in our strategies, very long-term relative to the market's focus, doing pretty well throughout all of these proposals, all of the negotiations, and so forth. We do know that President Trump feels he has to work quickly, because within 18 months to 2 years, he will be considered a lame duck. Now, I'm not so sure about this president, but that's typically the way the cycle works. So we shall see. The other thing that we've learned is on the regulatory front. Deregulation is the order of the day. And I do believe that for every one regulation proposed, 10 will have to come off the books. I think they're going to be pretty strict about that, so that's interesting. And then even when it comes to spending, this administration is thinking about spending smarter. Even in the defense administration, we're hearing a lot about new technologies and less about the traditional defense industrial base, so that's good. I'm going to start going through the charts now, which will get us through monetary policy, economic indicators, and market indicators, and then I'll wrap with big ideas. So here we go. This chart is giving this administration license to cut spending and streamline the government in as many ways as possible, especially regulations, to stir economic activity. So the way to get the deficit down, so to get this line moving up, there are a couple of ways, actually: cutting spending, which of course this administration is doing, raising taxes, which they do not want to do, except, interestingly, for perhaps private equity. We'll see if this time around the private equity tax breaks are eliminated.
The Chinese government is making preparations to lift its prohibition on Bitcoin and other cryptocurrencies by the end of the year 2025. which is yet another transformative development. After several years of varying rules, beginning with limits in 2013, followed by harsher measures in 2017, and culminating in a statewide crackdown in 2021, this represents a substantial shift in how policies are implemented. With China's economy once again joining the arena, the reopening of doors to digital assets has the potential to bring about a significant change in the global cryptocurrency market. There is a possibility that trading volumes will increase, which will lead to an increase in prices and stimulate innovation in blockchain technology across industries such as healthcare, supply chain, and finance. The possibility of obstacles, on the other hand, includes stringent rules and the requirement that any mass adoption be in accordance with China's more comprehensive economic objectives. In addition, Arthur Hayes issues a stern warning on the concept of a United States Bitcoin strategic reserve, stating that it has the potential to result in market volatility that is driven by political considerations. Additionally, in order to maintain Bitcoin's decentralized nature, he suggests that it be gradually incorporated into the existing financial system. While prudence is strongly encouraged, investors should conduct extensive study before making selections in a market that is always shifting. Also, don't forget to click that subscribe button so that you may receive the most recent cryptocurrency news delivered directly to your inbox. Maintain your knowledge and keep one step ahead.